No, the boom is back. Is that so?
What we are is in the early phase of a very strong recovery for the Irish economy after the huge challenge, anxiety and trauma that the darkest days of the pandemic have caused us. I think it's a little early to describe it as a boom, but I think at this point what we could say is that we have been successful in putting together the supports that have helped our economy recover to this point, combined due to the efforts, the stamina of our country and all who work in our economy.
Yeah. Now, the question of the money that was invested in combating the pandemic and supporting businesses, you'd have to say, I suppose, based on this, that it was money well spent.
Indeed, we overall will have seen our indebtedness increase by around €32 billion versus where we were in the pandemic. And for example, the employment wage subsidy scheme will be between €9 to €10 billion of that. But the employment wage subsidy scheme in particular has played a vital role in helping employers be viable across the moment in which we required them to shut. And the value of it has been demonstrated in the really rapid employment growth that we have seen since our public health regulations have allowed a reopening. And just to briefly conclude with a figure, just to illustrate it, if you look at where we were in the darkest days of the pandemic in 2020, we this year will now have 400,000 more people working in our economy than we did at that point, which shows the value of those supports that in turn were due to our public finances before the crisis hit.
Now, let's talk about that 32 billion that was spent, perhaps very well spent, in keeping people basically from hunger and keeping them in their homes and all the rest of it. How long will it take us to recoup that money?
As I know you'll be aware, Pat, in many cases, what we do is refinance that national debt in the future and then over time very slowly pay it off. If you look at how we could recoup it, there are already signs that if you look at the level of tax revenue that came through last year, particularly with income tax, that played a role, if you want, in helping us avoid to have to borrow how much I thought we would need to do when we face some really challenging times. But due to the way in which our economy is now recovering, our economy is now going to begin to grow at a faster pace than our debt will grow. And the critical thing, therefore, is the financial markets will look at how much debt we hold and they're going to see it begin to decline as a share of the value of the income in Ireland. And that's a very, very positive trend for us to go on. And if we manage our spending and our taxation sensibly across the next couple of years, which Michael McGrath and I are determined to do, we're going to get on that path.
Now, if we go down to the micro level, this one has come in from Mark in Galway. He says, delighted the boom is back. Am I to believe that the financial disaster that was experienced over the last 2 years by many businesses in the hospitality, entertainment and tourist sectors is all sorted and everything back to normal? Because it's certainly not for my business, which is supplying the international tourist market. I'm beginning to believe that I'm the only business that is still not back to anything close to my 2019 turnover. I'm relying heavily on the EWSS to support my family, which, as you know, is soon to end. I'm delighted the government is taking so much revenue and taxes from the pharmaceutical and multinational companies. That's all they seem to be interested in at the present. I'm beginning to believe that tourism, the sector in which I'm involved, is not of great importance and, quite frankly, is expendable in the greater scheme of things. That's from a despondent Mark in Galway.
I never used the language of boom to describe where we are. As I said, it's too early to be using language like that. But
but a lot of companies are back and, they're going back to the office and all the rest, and they've survived trading with remote working and all the rest. But we know hospitality suffered, and there have been pleas to do something about the warehousing of revenue debts, which are coming due and which will scupper many of these businesses if they have to fork out now.
But it's exactly because of the value that I and the government place in the hospitality sector that we've ran the employment wage subsidy scheme for so long. If you look at where we are, if you look at the combination of the temporary wage subsidy scheme and then the one that we brought in for longer, the employment wage subsidy scheme, we have now been paying up to €350 per person in employers that have been most adversely affected by the pandemic. It is exactly in recognition of the challenge that that listener has just texted into you, that we put that in place, that we warehouse tax liabilities, that we ran the 9% VAT rate, and that we have cancelled commercial rates for the duration of the pandemic. And if you look at the issue that your listener is raising now regarding the future of that scheme, in December alone, we invested €420 million of your money in running that scheme. And what I have said is that for businesses that have been the most affected by the pandemic, we will continue to run it, albeit in a moderated form up to May. So if you look at the scale of what we've done, you raised a question earlier on with me regarding how much additional debt we've taken on, how much we've spent. We've done all of this because we want to give every employer who was viable going into this pandemic every chance of being viable on the way out of it.
Now, what about the warehousing of revenue debt? I mean, will it be down to each individual business to go to the revenue commissioners and say, look, if I have to pay you this now, I can't. I'll have to borrow money to pay it. And even then, my business may not be viable with carrying a loan. And will the revenue commissioners, maybe on your instructions or advice, be sympathetic to that kind of situation? Or would it be better to have a blanket scheme on this warehousing?
So if you look at where we are with the warehousing of tax liability first. So again, businesses that have been affected the most by it, the scheme and the opportunity to warehouse will be available for a few more months. What will then happen after that is for a 12-month period after that, you will be able to warehouse your tax liability still at a 0 interest rate. And after that, the interest rate will then move to 3%. The revenue will then agree, taxpayer by taxpayer, an appropriate tax payment and tax settlement plan that, of course, will reflect the circumstances of each company. And it's because of our understanding of the challenges that employers have faced that we've put in place all of the economic supports that I think have been acknowledged by many as being very successful.
Okay, but there'll be no, what I'm saying,
there will not be,
asking is there won't be penalties, because that's what really can make revenue debt rocket.
Well, there will be an interest rate of 3% in a year's time, a bit more than a year's time for many, but up to that point it will be 0. And the implicit in your question, I guess, is are we going to write off those tax liabilities? Are we going to bring them some form of an amnesty? And we're not. And the reason why I'm not going to do that is because there are other employers for whom it was very difficult to get by, but did make the decision to pay their tax throughout that period. There are many, many, many taxpayers who have just gone through an appallingly difficult period who kept on paying their tax, particularly those who were self-employed. And what would I say to all of them if I then said to a particular set of employers, you don't have to pay your tax in the future? So you will have to pay the tax liabilities that are warehoused, but we're doing that over the longest period that I believe is appropriate, and the revenue, I'm confident, will deal with that in a way that's appropriate to each taxpayer.
Yeah. Now, people are anxious for fairness, and they will ask you then, what about those companies who appear to use COVID payments to pay dividends to shareholders?
And if you look at that issue, the first thing I would say is that the overwhelming majority of employers use the employment wage subsidy scheme in exactly the way we anticipated and exactly the way we wanted. And a very small number of employers did pay out dividends across that period. We have overall recouped back now approximately €110 million of the employment wage subsidy scheme through the Revenue Commissioner. I'm not in a position to retrospectively change the operation of the scheme. And while, of course, I know that will be a source of debate and it's been raised as an issue by some, it is a consequence worth considering for the fact that we had such a simple scheme on the way into it, where your access to the scheme is only dependent on your revenue and whether you were tax compliant. Didn't have any additional requirements about profitability or any other matters, which has saved so many jobs.
Okay. I presume those companies who pulled that stroke, if that's what it was, would expect a revenue audit, which might not please them.
Well, they'll get a revenue audit in compliance with tax law. And again, just to be completely clear, like the tax law in relation to the employment wage subsidy scheme was about your turnover and whether you were tax compliant. And if they meet those criteria, then that would be dealt with by the Revenue Commissioner.